Good morning, student. Today I am going to teach you chapter ledger. Now, first we have to know about the meaning and definition of ledger. So, let us see meaning and definition. Student, business transactions are first entered in journal or special purpose subsidiary books. The next step is to transfer the entries to respective accounts in ledger. In other words, all entries recorded in a special purpose subsidiary book or journal are classified, and in order to ascertain the position of a particular account, all transactions relating to that particular account are collected at one place in the ledger. In short, a ledger is a book which contains all accounts of the business enterprises, whether personal, real, or nominal. According to L.C. Cropper, the book which contains a classified and permanent record of all the transactions of a business is called ledger. A ledger may be kept in the form of a bond register or cards or purchase sheet in a loose leaf binder. We can say that purchase sheets in a loose leaf binder. Each account in a ledger is opened preferably on a separate page or card. Now, need or importance of ledger. Need or importance of ledger. The basic objective of accounting is to ascertain as to, first, we can say that how much amount is due. First, how much amount is due from each customer, or how much the firm has to pay to each supplier. Second, maybe how much is the amount of purchase and sales a particular period. How much amount is the sale of or purchase in the particular period. How much amount has been spent on each of expenditure, and how much amount has been earned on account of each head of income. Journal fails to provide us these information because it is a recording of chronological order only. Daily transaction of a business. Transactions of the same nature are not recorded at one place. In the journal, for example, if we want to know a particular date, the amount due from surrender Mohan and Company, the various transactions pertaining to them will have to be sorted out from journal or subsidiary book and will have to be collected at one place from sales book. The amount of sales made to them on each date will have to be ascertained. From sales return book, the amount of goods returned by them will have to be ascertained. From cash book, the amount received from them on different dates will have to be ascertained. And even then, some information may be omitted to be collected from various books. But in the ledger, all the transactions pertaining to surrender Mohan and Company will be posted at one place in an account opened in their name. So, we can say that the ledger is called the principal book. It is also called the books of final entry because the transactions which are first entered in journal or subsidiary book are finally incorporated in the ledger. Now, difference between journal and ledger. I have discussed about journal in my previous video. Full detail of a transaction narration are recorded in journal, but in ledger, full detail of transaction are not recorded. Final account, that is trading account, profit and loss account, and balance sheet cannot be prepared with the help of the books of journal, but final accounts can be prepared with the help of ledger balances. Accuracy of these books cannot be tested, but accuracy of the ledger account is tested by preparing a trial balance. Now, these are the difference between ledger, journal and ledger. Now I am going to show you a format of ledger account. It will be in T shape. Sometimes it is also called T account. Each ledger account is divided into two equal parts. The left hand side is known as the debit side and the right hand side as the credit side. So let us see the format of ledger account. Student, this is the format of ledger account. Left hand side called DR side and right hand side called CR side. Date, particulars, JF, amount, date, particulars, JF, amount. Same, it will date, particulars. There are two formats here. JF, amount, date, particulars, JF and amount, credit side and debit side. Now suppose one transaction on 2020 July 1st started business with cash rupees 8,000 is given, then journal entry will be, you all know, cash account DR to capital account. Amount will be 8,000, being started business with cash, and this journal entry will transfer into ledger account. So on 1st July I have to open first cash account then capital account, because this transaction affect two account. So I will open two account in a ledger. First will be cash account, then it will be capital account. So I will open a cash account first, and then second is capital account. Now I will post the journal entry in ledger. In journal we are doing entries, but in ledger I am posting the journal entry. So this is called ledger posting. Now question will be cash account to capital account, but how will I post in ledger? So in cash account debit side we will write to capital account. In cash account, debit side, I will write to capital account rupees 8,000, and on 2020 July 1st. Now second thing is capital account. Therefore capital is in credit side, so I will write post cash account in credit side of capital account. So it will be cash account by, in credit side we will write by cash account 8,000 on 2020 July 1st. So this is the process of posting in ledger account. Suppose one more journal entry on July 2, purchase goods for cash rupees 1,000. Then journal entry will be purchase account dr to cash account, being goods purchased for cash. Now again I will post in ledger. So this journal entry is related to purchase account and cash account also. So I will prepare purchase account also. So we have to open an account for purchase. So let us see. I have prepared two account. So I have to open purchase account. This is debit side and this is credit side. Date particular JF amount, date particular and JF also, and amount. Now I will post in purchase account debit side rupees 1,000 is given. Debit side of purchase account to cash account. So on 2020 Jan 2 to cash account will post 1,000 rupees. But in cash account credit side I will post purchase account. So I have also a cash account. So I will post in credit side of cash account July 2 by purchase account 1,000 rupees. Now I am going to show you one more journal entry. Suppose on July 3, journal in transaction is sells goods for cash rupees 1200. Then journal entry will be cash account dr to sales account 1200. Now I have to open cash account and sales account. I have already prepared cash account, so I will put in debit side of cash account according to question. In debit side, cash is in debit, so in debit side of cash account I will post to sales account. So let us see. July 3 to sales account 1200. Now credit side of sales account, it will be by cash account. In credit side, this is suppose sales account, debit side and credit side. In credit side of sales account, according to this journal entry, I will post by cash account 1200 on 2020 July 3. So all the account shows in journal will open separately in ledger. For example, you can see that I have opened cash account, capital account, purchase account and sales account. Cash account will open only one time. All the account will open only one time, and we have to put and post in this account one by one. So this is the process of posting in ledger. Now when we will balance it, then what will be the process? Let us see the balancing process. Now I will balance it, so we can see that debit side is more than credit side. So I will write in debit side total 9200, and also in credit side same amount. Line will be in a straight. Now credit side only 1000 is showing, so when I will deduct 1000 from 9200, it will be 8200, and it will show by balance CD carried down on July 31st. it means last of this month, last date of this month. Now balance CD will forward it to next month, so it will be on 1st August to balance BD brought down. It will be 8,200. So this is the process of balancing. I am doing one more account. This is capital account, and in capital account I have credit balance more 8,000, so I will write in both side 8,000, and nothing is given in debit side, so I will write 8,000 also, and to balance CD on July 31st, and it will transfer in next month, so it will be 1st August by balance BD 8,000. So this is the process, and you can see one more or both the account, purchase account and sales account. In debit side 1,000 is given, so I will write 1,000 in both the side by adding, but here we have to put 1,000 by balance CD on 2020 July 31st. Now by balance CD will transfer into next account, so it will be on August 1st to balance BD 1,000. Same I will do in sales account 1,200, 1,200, and to balance CD 1,200, because nothing is in debit side of sales account, and on July 31st, and when I will transfer, then it will be on 1st August by balance BD 1,200. So this is the process of balancing and posting in ledger form. I hope you have understand the ledger. If any problem, you may call me and ask me through message also. I will meet you in next video. Thank you.